system in Thinkorswim to let you know when it has passed that, or do you automatically have it triggered?
No, I have it to let me know.
Okay.
So, I have it set, but the alerts are set in my chart to let me know when it passes, when it has done it. So then I can go and look. Usually in my alert though, I also have it set to say, I write, if you're on your computer, you can write a note. On your phone, you can't write a note, but on your computer, you can write a note. And I'll write something like, if I'm doing a call debit spread, I'll put the strikes and the experts to remind me what I said I was going to do. But actually, the message I got came through this morning at like 9:30 while I was on the call, and I don't think I even saw it. I saw it later in the day, and by that time I looked and coin was already at 164. I was like, well, it did the move already. But
Mm.
that doesn't mean it won't continue, but what I had it set to do, it did it. But yeah, I use the alerts on my chart in Thinkorswim. Yep, that's how I do it. Anybody else trade today and have some success?
You were saying you couldn't leave it. You can't leave a note on what?
If you're on your phone and you're putting an alert on the chart in your phone, there's no place to write a note in the alert like it is on the computer.
Oh, okay.
Mhm. Why? Do you know that to be the opposite to be true?
I'm gonna have to check. I'll check, but I would think I was thinking more just on the chart in general. You're being more specific.
Yeah, you
To
can put a note on the chart for sure. I'm saying it usually with the alert. That way, when the alert pops and comes to my text message, I can read all the stuff I wrote if I put it in on the computer.
Yeah, I guess that does kind of
Yeah,
suck.
on your phone, it just tells you, if you said, I want it to be above 159, the alert just comes through and says, coin is at or above 159. That's all it tells you. Basically, it's an alert to let you know something's going on.
Gotcha.
Hmm.
Um, to answer your question about the trade, so yeah, so yesterday when my PC froze, I got in. It was a good trade, but when the PC froze, I didn't know that it had went all the way down and turned around and came all the way back up. You usually don't see price dropping that far and then coming back to above where it opened.
Hmm.
It does happen, of course, but I haven't seen it in a while on Russell 2000. So that ended up being, by the time I saw it, it was already basically breached. So I really couldn't do too much because when it started moving, it was moving. Okay.
Oh, yeah.
So what ended up happening, it didn't. I basically just let it go ahead and just went ahead and let it expire. It never did come back the opposite way. So there was nothing for it to trigger. And then I decided not to trade today, so that
Okay.
I didn't have any what do you call it? Revenge trading.
Oh, okay.
Make sure that I didn't do no revenge trading.
Hmm.
Just decided to just not even trade at all. I
Okay.
was in my sim doing stuff, but I was like, I'm just gonna go ahead and skip this one.
Okay. Do you
Just
feel like it was gonna be that it was still on you that you wasn't gonna be able to trade today without feeling revengeful?
say it again.
Did you feel like you weren't gonna be able to trade today without being vengeful?
I didn't want to chance it.
Okay.
I didn't want to chance it. I'm normally not. I'm the type of trader. I don't pay attention to people's call outs. I don't pay attention to anything. I know I'm trying to focus on rut. Have been in that vein about a month, 2 months.
Mm-hmm.
Um, but I also want to make sure that I'm not, jumping the gun. Because when you hope that a trader go well,
Mm-hmm.
that's the equivalent of fear of missing out, in my opinion.
Uh-huh.
So I was like, you know what? That was a max loss. Um, it was a trade that it didn't blow up my account or nothing
Mm-hmm.
because it was only one contract. But I just wanted to make sure. I figured just give it an extra day and be okay with it.
Mm-hmm.
The This is Wesley. I
Mhm.
just had a question. Can he, I know it's not part of our agenda today, but if we have time, can he show us what he did and just walk us through that process? I don't
Mhm.
do RUT. I don't know what trade or how y'all do, because honestly, I'm barely keeping up with the just straight puts and calls.
Mhm.
Y'all are doing both ways, and I'm just wondering how does that look in the thought process?
Mhm.
Because eventually, I'm assuming my hope is to get there. It
Yeah.
is to get there because you're saying every time I hear you say they take advantage of your money that you're putting up by
Mhm.
doing an iron condor,
Mhm.
it makes me think I'm missing one side of this
Mhm.
of a possible trade.
Mhm. Mhm. Okay. Well, when he's Jamie, when you're done with your teaching or however you want to work it in, you could share your trade with you when you're up and running. Okay. Let me get us on the right screen.
Yep, just remind me, and I'll I mean, I could do it at the beginning of it too, but that's fine.
Mhm.
Miss Arlissa, I did a 1 DTE XSP trade
Okay.
towards the end of the day. I was just trying to test out my platform since I'm new to it
Mhm.
to see, just testing it out to see if I would be able to do it correctly.
Uh-huh.
Because there's some changes that you can make within the options chain to match the way the price action or the prices either ascend or descend. So just making sure I was putting it in correctly. So I'll probably play with XSP until I get my bearing straight on the options chain for trading verticals. Because
Mhm.
I've been trading singles, just buying straight calls and puts
Mhm.
when I
Mhm.
first opened the account. But now I'm just trying to make sure I understand it better with the verticals before I do anything larger, because I usually stick to just SPX.
I get that. Okay. So did you you just use your own look at the deltas and stuff, or did you look at the alerts from Peakbot?
I didn't use any Peakbot. I haven't been using Peakbot.
Mm-hmm.
I stopped using them. But I just looked at the chart, looked at where price was going, where it came from, looked at the gaps and whatnot. Honestly, that gap, looking at those gaps have been kind of a game changer
Okay.
for my trading.
Cool.
And then I looked to just see where I could get in from where price is going or where it's not going, and got in it. I actually made I was up today when it closed. So we'll see what it looks like when the market closed. So we'll see what it looks like in the morning.
Okay.
And I was able to do an OCO bracket on it to get out at a certain percentage.
Look at you. Look at you.
Mhm.
It's you. Me and TJ were working on setting the buyback percentages for the iron condors to buy back, at the lower and then up at the, the basically the profitable and the loss, the one for one. So we were working on that today just to make sure that no matter how it goes, you basically I always end up profitable with the strategy, because now we're talking about putting on more size. And
Mhm.
when you start doing more than one contract, you're like,
That
"Ah."
anxiety, yeah. The way that Tasty Trades does it, it automatically, when you put the OCO in, it automatically pulls in a percentage for you to get out at 50 to 60%, or you can set your own. And then the stop loss is automatically
Okay.
like at 20 or 30%.
Okay.
Yeah. So I don't adjust the
Of a
stop
credit
loss.
spread? That's interesting.
Mm-hmm.
Wow. Okay.
And as I'm looking at their platform, the majority of them are sellers.
Mm-hmm.
Yeah. So I think they built it out for sellers.
Okay. Mm-hmm. Okay. Coolly how?
Mhm.
Sounds good. Sounds good.
I'm sorry, what platform is she talking about?
Tasty Trade.
Oh,
Tasty
Tasty
Trade.
Trade. Okay,
Mm-hmm.
got it.
Tasty Trade is the same people who designed Thinkorswim, and then they sold it and started Tasty Trades.
That's
Tasty
Tom
Trades
Salsloff, correct?
based on what? Oh,
Tom
Tom.
Salsloff.
Tom somebody, yeah.
Yeah,
Yes.
okay, yeah.
Yeah.
One of the things that they do that's another positive thing is that because they know people do spreads after a certain after you've spent $10 in fees, that $10 is your cap. So you don't pay per contract, you pay per contract up till $10. Once you're past $10, that's all you're gonna pay in fees.
I like that too.
I like that too. I do agree with that.
Okay, that's good to know.
Yep, they have a cap on the fees. So you, of course, you gotta do more contracts so you can, get to there, but that's a plus if you're ready, when you get ready to scale up. Because if you're paying 50 cents per side, an iron condor, that's $2 in fees right there, and that's on each way, $2 getting in, $2 getting out.
Yeah.
Yep. Okay. All right, we got anything else?
Just be
If you
aware.
guys-
Oh, go ahead.
Oh, I was gonna say, if you guys decide to use Tasty Trade, just use ask Jamie for his affiliate link, but he will turn on you. He will talk trash to you.
You know what?
Do.
Don't do that.
You just need to know. You need to know who you're dealing with, sis.
Yeah, yeah.
I'm gonna turn if you you talk trash first.
You need to know who you're dealing with, because he is here for the foolishness.
He
So
is.
if you decide you want that smoke, he will deliver the smoke.
Hey, thank you for the plug. I appreciate that.
Absolutely.
Jamie, what you getting ready to say about Tasty Trades?
Oh, you've been nice to me all this time, Jamie. I appreciate that. I did do a sim trade today at the end when I saw that it wasn't going to break through 5,600.
Okay.
It's
And
a
you
little-
didn't look at your boyfriend who can't get one past 120?
Now you know I did once I saw that, but once everybody was confirmed we wasn't getting to 56. Even Mancini said we wasn't getting. We did it and we came back, and I was like, oh, okay. It was in the last hour or like last 40, 30 minutes. So you know I gotta look at him.
Well, I know you got to check for him. I actually got some money off Nvidia earlier today. As soon as it started popping at the open, because I had Nvidia based on the thing I put out for us this morning. I put into our chat from the Elite Options Trader based on that this morning. As soon as it popped past 117, I jumped in there and rolled it up to 120. And then after it would pull back off 120, and then it started climbing up again. I was like, well, let me go see. Made a few more dollars while it climbed up some more. And then that was my little run with toy. Nvidia might just be a little side man. He might be my jump off.
What?
I'm willing to share. I'm willing to share because I'm not, I can't have them all the time anyway.
Right. Ooh-wee.
There's enough room. There's enough room.
What do you say, Jamie?
I am literally laughing out loud right now. That is
Y'all might have to edit that.
Well, let's be real. Back in the day, they called it man sharing. So some things don't really go away.
Yeah, I cannot.
We may just not talk about it, but
I cannot.
Woman to
I'm
woman.
quite sure I'm not the only one. I'm quite sure Nvidia. I'm not his only girlfriend. So I'm okay with that. I'm okay with that.
Okay. Sounds good. Well, Jamie, I've set it up for you.
Is that what happened?
Was this a setup? This was the setup.
Exactly what you did. You set it up.
Yes, I set it up. So Jamie is going to share candlestick patterns with us this evening, and I'm going to give him the floor. I'm gonna I need to make you the host or the co-host so that way you can have control?
Yeah.
Let's see if I can get you some control.
Or something, as long as y'all can see the screen, that's all that matters.
It's a co-host should be enough, and if it's not, I'll make you the host, but
can y'all see my screen?
Not yet.
Not yet?
Yes.
You can see it? Okay. chart
Okay,
pattern.
there you go. Jamie has the con.
Okie dokie, y'all can hear me just fine? Yes, no, maybe?
Yes.
All right. So
She's
we're gonna
like,
be
yes, we can hear.
awesome. We're gonna be talking about chart patterns. And the first thing I want to do is just show you the graphic. This graphic is in the Telegram group, and that is this graphic right here. These are examples of chart patterns. I do not know who created it. I cannot take credit for creating it. I can only take credit for using it a whole bunch. What a chart pattern does is designed to give us a possible idea of what direction the price is going to go. We want to know if the price is going to continue in the direction that it was going, or is it going to be a reversal? Right? So continuation and reversal is what we're trying to find out when we are dealing with chart patterns. Now, generally speaking, a good example to show you the difference, we'll look at a daily chart. So usually when we're talking about candlestick patterns, we're usually more so zoomed in on the most recent time frames or what have you. We're probably closer to price when we're looking at these things. So the chart pattern is really more so of like a macro view where we're just pulling, pulling back a little bit, adding in more data just to see what could possibly happen. So, there's no particular amount of time per se, but usually it's not, the micro view is the up close candlestick patterns, and then the chart patterns is going to give us over time what does it look like is happening on the chart. So that's really the main difference, is that chart patterns is a little more micro in what it's trying to accomplish. So the reason why I got the word possible price right here, I have possible in bold right there because it's not guaranteed. It's not guaranteed. This is allowing us to anticipate where price may be going, but it is not guaranteed that price is going to be going in a continuation pattern or in a reversal. And you have bearish continuation patterns and you have bullish continuation patterns, bearish reversal, bullish reversal. Okay. I cannot overemphasize though that you do not have to try and memorize all of these different patterns. That's not what it's about. It's really just about understanding all the things that we already discussed. What are the buyers and the seller? What are the buyers and sellers doing over a particular time frame? Okay. So it's not about, you'll see, this is called a descending triangle. This is a bullish wedge. This is a rising wedge. All of that is not really the point. The point is understanding what's happening with price and then what's happening with the buyers and sellers. Okay. So I want to make sure that that's clear at the top. So I wrote down some pros and cons that I look at and what the reason why chart patterns work for me. Again, helps anticipate price direction. Also, the chart patterns will appear on multiple time frames. So some of the examples that I have are from different time frames, so you can see it on multiple time frames. It can be used in conjunction with other technical tools. That's a good thing too. As a matter of fact, we were talking about broadening on the last session, so you may even see some of those elements when you're looking at these. And then, of course, it adds another tool to the technical analysis toolbox, which is a plus for us. The only cons that I've seen with the chart patterns is that they're not seen on all the time. They're not seen on all the charts all the time. So in other words, you can almost say they're elusive, but you're not going to see it every single time, every single chart or what have you. But it's good to be able to recognize it when you do see it. And then the other con would be the price unpredictability, because it can change direction. All right, I'm gonna give you one example of what I mean, but in a second. But so these are the different types of patterns, right? We'll use this as a starting point, the descending triangle. What they have in common, anything that's a triangle or a flag or a wedge, and sometimes you'll hear the phrase pennant. So many times those are going to be called, to start it off, it'll be called a flagpole, right? Which makes sense because a flag has a pole, pennant has a pole, a triangle, if it's hanging on something, has a pole. So in this case, for the continuation, you notice that all of these have the same thing in common. The sellers pushed this pressure down, okay? Then it bounced, it hit something, came back down, and this is the trend, okay? The same thing happens here, right? Same thing happens here. The only difference between all of these is what's happening with the buyers and sellers. The things that they have in common is the sellers pushed this down, and then when it decided to break, it broke down. It continued in the direction it was originally going. But if you notice, for this particular descending triangle, the buyers right here are holding serve. They're not moving. But the sellers up here, these are lower highs, right? Which I refer to it as a squeeze. All right, there's no more space, there's no more room for it to go. It's got to pop out and go somewhere. That same type of squeeze is right here, right? But here, bearish wedge, the buyers, these are higher lows, right? These are higher highs, but it gets to a point where it pops out. Remember, sellers push this down at the beginning, so that's why it's continuing. And you can say the same thing for here. Buyers are, this is slightly lower, you know, these highs are kind of going up, these lower highs are kind of going up, but the sellers and these highs, I'm sorry, the lows are getting up higher just a little bit, but these highs down here are definitely dropping, right? So that's what's happening with the sellers. I always look for that initial flagpole before I look for anything else. And this is continuation for your bearish. For your bullish continuation, same type of deal. There was some type of run up, which would be the pole. But here, for its trend, the sellers didn't move, but the buyers were pushing up, right? So eventually it's got to pop out. It came up and it continued up right here. Bullish flag, same exact thing. Buyers push this up. Buyers at this breakout, it push it up here, right? Bullish wedge, symmetrical triangle. Notice the squeeze right there. All right. Now, the reason why this can get kind of tricky, and there's really, when I say no need to really try to memorize it, but just to understand what's happening, is because if you look at this symmetrical triangle and this ascending triangle, these two actually look kind of alike. They got subtle differences because the sellers didn't do a whole lot of moving here, but these two can look alike, right? So that's why trying to memorize it doesn't make sense. This particular graphic is really nice as well because it's going to show you once it breaks where you would enter and then where your take profit would be. And that's why I stick to this graphic because each one of these, you know, entry, and it's always going to be around the same spot. And if you are putting in a trend line, you know, you can always have an idea of where it might break down. And I'm going to show you some examples in a second. The reversal on this side is the bearish reversal. This is called a head and shoulders. And literally because when it ran up, buyers pushed it up. And when it did its trend, it formed this. On these two sides, looks like the shoulder. But how many times have we seen when we look at a chart and something will break past its previous high and it'll come back down and break down past it again, right? That might be one of these head and shoulders happening. But again, it'll break back down depending on if it's actually following suit. There's a point where you will have a break to the downside, as they say. Now, the one thing that these all have in common, I call them a neckline because this looks like a neckline for a shoulder. But you can call it a trend line, refer to it as a neckline, whatever you want. But there's always a point where that next point on that neckline or that trend line is where the break could happen. All right. And so that's what we're paying attention to on these. You also have, this is a reversal for the bearish, bullish reversal. This is an inverted head and shoulders, sometimes called a reverse head and shoulders. Same exact thing, except the sellers pushed it down. It followed this trend. It went down further. When it came back up, it did not go as far as this previous shoulder. And again, when you see it live, it's not going to be this clean. All right, this is the nice, pretty, well manicured version. It's not always like that, but the general idea is definitely there. All right, this is called a double bottom. Some of us have seen these double bottom, triple bottom, and that's the reason why these are important. And you could say the same thing for the double top and the triple top. It's important to watch your entry because you can't assume. So let's say you see this happening and you jump in because you think this is a double top about to break to the downside. If it's actually a triple top and you got in here and did a put, that means it's going to go up here and possibly come back down. That's why with these, you want to make sure you have whatever your entry signals are for your trading plan. You definitely want to stick to those. But the double top is definitely double top and triple top are ones that I see regularly. Double bottom, triple bottom are ones I see head and shoulders, and inverted head and shoulders. And then I see these two flags the most. So out of all of these, it's really only about 6 that I tend to see regularly that I look out for. Okay. Anybody got any questions so far before we start looking at examples?
Tiva had a question in the chat. I think I answered it, but you can look and see.
Okay, hold on one second. What's the difference between the falling wedge and the descending triangle? Yep. Okay. Right here. Falling wedge. Boom. Oh, very good. So I'm so glad you brought that up because that was going to be one of my points. This is another reason why, like I was just talking about making sure you know your entry signal. This is the reason why it's important to understand that there's no guarantee with what we're seeing in these, because the only difference between these two really is what happens when it gets to the end, when it's time for it to do its break. Right? The only difference between these two is this one broke to the downside and this one broke to the upside. Everything else is pretty much similar. And that's why, it's, like I said, and now I don't want to say it ad nauseum, but you definitely have to make sure you're aware of the signals that you want to use to know when you want to get in. All right. And many times it's going to be, if you're putting in a trend line, you'll be able to, at least mark the trend. I usually end up marking the trend line about where I think it'll be, and then go from there. But those two are the same. Or shall I say those two look exactly the same. So I'm glad you caught that. Another thing to bear in mind as well is if you look at this bullish flag looks like the triple top if it was on an angle. So if you turn this triple top a little bit to the right and put it on the angle, it will look like that. All right. The same thing can be said for the bearish flag and the triple bottom. Right. So I say that the trend lines become important, and wherever you mark the trend lines become important, and therefore your entries are going to become important as well. All right. So that's a very good question. And to be honest with you, it could, it's easy to get faked out when it comes to these situations because they look, so much similar. They look so similar to each other. It's easy to get a fake out on them and, get, I don't want to use the word tricked, but, get fooled into thinking it's going in one direction and it's not. Okay. So the basic elements again, if you're dealing with the triangle versions, there's the pole, the run up, the trend, what the buyers and sellers are doing, and then the breakout or the direction, right? So I got some examples that I want to show you here. And these were taken recently. All right. And so what I end up doing, this is literally how I when I think I'm seeing something, this is literally what I do when I'm looking at the charts, take a picture of it, or I'll just do it directly on the chart. And I'll go, I'll look at what was the last turning point? Okay. The first thing I'm looking at, where was the run up? Now, normally what you want, this is a pretty decent run up, but if it's basing to the side a whole bunch, then going up, that one, those I really don't count. I count when it's, either nice strong candles or it's an obvious run up in that direction. So the first thing I do is I mark the direction that it's going in. And then I look for the areas where it touched at the same time. Right. So that's the second thing I do. Like where in these equation do I see there are some touches, right? Touch, touch. Okay. So I got 2 touches right here. And mind you, you can count some people might count this as 3 touches. I just count it all as 1 because it's right together. All right. So I got a run up. This came down, came back up, and then made this move, came down again. Right. So whoops. This will be coming down the other way. I'll just use blue. Right. So this is to me would be a double top. Right. Let me I don't like blue because it's not. You like me that clear. Something clear. Right. So right in here is where it came back. It bounced. And again, here's the neckline. When it came back, went up around that neckline. Remember, these are zones. And this is where it broke down at this neckline. All right. So once I mark it, and sometimes I'll put more, usually might put more arrows in there. Typically I do something like this. And because I want to see the visuals, right? So this is what it's looking like overall. And then I'll look and see on the chart if it matches one. And in this case, it looks like this. Double top. So in this case, if I would have came into this chart and I would have seen that it had hit this, and if none of this had happened yet, I would have been seeing that, okay, it tapped this twice. Maybe this is going to be a double top. And then I would have, been trying to figure out what is going to be the next direction. Because of course it could stop here, come back up and make that triple, make it the triple, right? So I'll be waiting for some type of entry. And in this case, that gap down would have been some type of signal to say, hey man, I think we're dropping it like it's hot. or depending on or depending on what it is you use, I probably would have looked at the close of this day and said that this day closed below the low of this higher up day, and so that's something that I would have used on my own. All right. So this is one that I would say was a double top. This one could also be considered, again, they're not always going to be clean. They're not always going to be beautiful, right? But this one right here is an example of this is still considered a strong run up, because even though these are gaps, and we know with gaps, that's pressure, right? These are buyers' gaps. Buyers push that up, push that up, push that up. So this is a strong, and then it came down over here, right? So depending on how you wanted to look at this, you can always say, well, we got one here, we got one here. These are the two highest. We could definitely consider this area right here, the neckline, if you will, right? You can say it came down, whoops. Say came down somewhere here and then went back up here. And there's your double top. Again, not as pretty, but that's definitely the general idea. And in this case, you know, these were the two highs. Here's that neckline. Oh, I was talking about the neckline. So here's the neckline. So this area, again, remember these are zones, right? So somewhere in there, this is where it bounced off before. And once it hit right here, and this is another one, you look closely enough, this closed below. This is the high day in this example in the seller zone. This low point right here, this closed below that, just like on the other example. And then it gapped down. Right.
Actually,
so
you could extend that neckline.
Say it again.
So you can actually extend that neckline.
Most definitely. Most definitely. Yep. So somebody might say, oh, well, that's a double top. So it doesn't have to be all super huge candles, but the idea is you want to see, if you're doing the double top, you want to see it go up, come back, go up. And normally when we say stuff like, oh, it didn't break past its previous high, things of that nature, those are the kind of characteristics of the things that we're talking about. Okay. Got another example. This one is a little bit different. Here's the run up. Run up, right? Now on this one, what I'll be doing is I could do the exact same thing and just do this arrows, or I can do trend lines, either way, because I actually do both of them depending on what I'm looking at. But let's say we just do arrows, and this is going to end up being something like that. And notice where it decided to break down. Or I said break down. I'm sorry, I used that. Notice where it decided to change up and go in a different direction. Come down here. Right? So we're down here. Now, usually when I see these types, that's usually when I go over to the trend lines and see what the trend lines are doing. And I try to connect. So we try to connect multiple candles, at least two. In this case, at least two candles, right? So there you have, it's the run up. It did its trend. It came back up on this trend line. Let me zoom in for you. I got a bunch of arrows on there, right? But when it came back up, it broke along that trend line, which is the next spot that it would have been. This is the bullish flag. Right? And again,
which looks very much like the symmetrical trend. Like, I mean, what this is it just, is it nomenclature? Is it just, tomato?
Yeah, that's why I said, because at first I thought I had to try to memorize these. And I was like, it's too many of these to memorize. And then I realized, no, they're all saying the same thing, just a tiny bit differently. That's all. So yeah, they definitely. I have a friend who, if you were to see her and her cousins, they all look like a slightly different version of the exact same person. I kid you not. I was like, I want to meet your mama and your aunties, because there's got to be a template that all of y'all was broke the mold. Because literally, they all look alike, but just a tiny something was a little bit different with each of them that lets you know that they're not actual identical twins. And to me, if that's the same thing with these chart patterns. It's like it'll look alike, but it'll be slight, some little tiny, you know, ascending triangle, rising wedge, you know,
So those people were related.
and they were cousins. Yep.
Okay, then that makes sense. You just, the way you left it out.
What do you mean?
You didn't bring us back around to the fact that they actually were related.
Oh, I thought I said so when you see pictures of her and her cousins.
I think you did say that. Yes, true.
You did.
Yeah.
You did.
So one thing I do like about this, Mr. Jamie, is that you can also trade, like go back to the chart you were just on, you can still use support and resistance with it.
Yep.
So because that bottom one there, the
Yep.
bottom red candle and the green one, you can just wait till you see what happens the next, if this is on the daily, to see if the next candle breaks that trend line to see if it's going to stay going up to enter the trade. I really do appreciate how y'all are showing us how to see these charts. This
Yep.
is really changing how I trade.
Yeah. This is yeah. And that's why I said like these are all what's happening? These are all is there a ghost writing right now? What are we doing here?
Like that is so hilarious.
It's a 2-2 continuation.
Oh,
Ooh,
okay, yeah. See, now you talking stretch stuff. I don't know anything about that, so I ain't gonna front.
they just wrote on your shirt, Jamie.
All right.
Not they, Janae.
But
I
yeah,
didn't know who did it. I thought it was our Alyssa, honestly. I didn't
It
think you would.
is.
It is me.
Right.
You should be able to see
Right.
my name as I write. No,
yeah,
it was
No,
it was
no,
me.
I don't see your name.
You didn't see my name when I was writing?
No.
And when you first start, you can.
Oh, okay.
Oh,
yeah, well,
I just know she would be the only one that would do.
right. Well, actually, other people probably can at this point.
You can.
But yeah, bullish. That's the bullish wedge, and again, usually that trend line. In some cases, it may even happen like this, where it may not be a whole bunch of candles. In this case, zoom in a little bit. And I just learned this from the Thinkorswim coaches. And they were making the same type of I guess you could say inferences might be the right word. But this was the run up. So that in this case, I was thinking, I was waiting for this to, come down a little bit more, but the buyers are holding serve here. Right? The buyers are holding serve right here. I got two candles that I can connect. This is another one of those sit back and watch and see what happens. It might come up here, tap, come down here, tap, and you back to watching to see which direction that it goes. So this is why when I go into the chart, I just always look for the run up to see what happened. This was a run up that I saw right here. But when I came into the chart, I noticed that this had already went way past the halfway point. All right. It went way past the halfway point.
What?
And so I knew that this wasn't going to be anything that I could use. So kept it moving.
If I
What
could
time frame
interject,
is that?
Y'all got some questions.
Say it again.
What time frame is that?
This one is the daily.
Okay.
No, I'm sorry. This is on the weekly. This one is the weekly.
Okay.
This one is the weekly. This one was weekly. This one was the daily. That one was a weekly. And I think one coming up is going to be 5. One of these was the 5-minute, if I'm not mistaken. So here's another one. Bearish version, if you will. pole running. Now, usually I use terms like pole running from north to south, meaning it's coming from the top and then coming this way, or I'll say south to north. Usually if I say south to north, it'll be going up in this direction. That just means that that's the direction that the run up was happening, right? But now you got the same situation now with this one. It's going to bounce around a little bit. And I'm noticing right down here, you got a few touches, depending on how you want to judge it. You can say 2, maybe 3 touches here, right? Bounce. But now if you look at this close enough though, this is very choppy too. So it's not as clear what is happening, but we do have these tips that are poking up here, right? So it's not as clear as the other ones, but we can see that there is something happening here. So because this came down this way and then it went up this way, of course, I'm looking at that as a reversal. I would have said double bottom or triple bottom, something like that.
Would you be able to see it closer on a lower time frame?
It will change when you go to a different time frame because you're dealing with more candles.
Right.
Yeah, so the overall look of it would definitely change.
Because since that's on a daily, if you went down to like a 4-hour or an hour, you think it would show that double or triple bottom?
It could very well. This is a snapshot, so
Got it.
but it could very well. We can look on one and check and see. But I will definitely put this at a double or triple bottom, just in what it is doing down here.
Okay.
And boom, it reversed and went the opposite way. Again, going back to, well, where's the neckline? I'll be putting the neckline right about here and waiting to see what it does. Right, this closed, this was the low day right here. This one was the low day right here and it closed above that. So I would have been thinking, okay, this is probably going to go up because of that. All right. If you have it in your trading plan, your signals and what signals you want to use.
Was that a gap, Arlissa?
Where at?
Where?
So that third circle at the bottom.
Here?
This one here?
Yeah, so that the top of that red, is that
Here?
oh, and then up to that green?
It closed here and it opened here.
Oh, I did
Remember, close to open?
Mm-hmm.
close. See, I just said that. I did the reverse. I did open to close. So you said close to open.
Mm-hmm.
So it was a gap.
Yeah.
It just came back down to
It didn't even, well, it filled it over here, looks like. Well, it got a little bit of it, got most of it over here. From the close to the open. Mm-hmm. Was a gap.
Okay, so I did call it right.
You did.
Okay, so that third, yeah. So I'm looking at this where Jamie has that third arrow right there. Yep, that red,
Mm-hmm.
and then that green that went all the way up.
Mm-hmm. The close of the red, which is at the bottom, and
Yeah.
the open of the green at the bottom also, there's a little bit of a gap. Price did come down and kind of fill some of it, left a little teensy bit, looks like, but I think this one over here got the rest of it.
For those of you that are not aware, Tinchi is a unit of measurement.
And teeny and tinsy. Yeah, all of that.
Yeah, teensy.
Yeah. Yeah, because we call people who are stingy tinchy. Okay.
Oh my.
So this one right here is one that will be an example of head and shoulders. I'll be looking at this for the head and shoulders. This will be head, shoulder, shoulder. Again, it's not going to be as clean, but the idea is when it started running down, it got turned around. And this is on the 15-minute chart, by the way.
That's the N-word. That's the invert. That's the reverse of the Head and Shoulders.
I thought you said the N word. I'm like, what, the N word?
No,
So
inverse or
gotcha.
inverse or reverse or
Oh,
upside down. Sorry.
when it came back down,
But it could look like a hangman. Look at this. This is crazy. You got these circles.
sure. So again, it's not as clean, it's not as pretty as this one right here, but it's the same idea. Came down, up, broke past it, went back up, and then reversed. And that's exactly what this is designed like it was doing. So this is the reverse head and shoulder. Again, just to show you that you'll see them on various charts. I think we've done mostly day, week, and 15-minute in these examples. And the final one I got for an example. Well, actually, this one, it looks just like the, I believe this one will be like the bearish flag. Cause got your one down here. And then this one, I'll be looking at to do trend lines. Like something like there, in there, somewhere in there.
I see some broadening formations too.
Exactly. That's why I was saying that these all definitely can work in conjunction. And depending on, so this is the rundown, and this comes in on, in this case, it got an extra one, extra tap on that trend line. And I'll be putting it somewhere in there. As long as I have two, there you go. As long as I have two, I'm looking to make sure I have two candles that I'm touching, right? So boom, 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 boom. And we are looking at this one, bearish flag. Entry will be there when it broke down, or shall I say broke to the downside, right? Now, I don't know what the entry would have been if you was watching it, because you got a couple things here that you could be looking at. What would have got my attention just in general would have been this candle when it closed. Actually, this candle up here when it closed below this one, but definitely that strong push is what I would have been paying attention to. But and this would have just kept going. What are we pointing at?
I'm pointing at that
No.
candle because once it came down to that, to your trend line to touch, that is a shooter. That candle is a shooter, and the shooter, it gives you indication that it will go down some more. So the break of that candle, I know I'm drawing over, but the break of that candle would let you know once it hit, once it went below the bottom of that green candle, that would let you know there was some more downward action potential.
Okay. So we got a shooter.
Mm-hmm.
Nobody panic, not an active.
I know,
Yeah.
right?
Yeah, these days
Oh.
you need to clarify these days because these children have started up
Hello.
again. What are we
We're gonna
doing?
stop, drop, and roll. Hello.
It is not.
No.
But curious because candles tend to repeat, which is making me I can't wait to hear your explanation as you explain your rut situation, because usually something goes up, it does come back in a matter of time. It just depends if there's some momentum. But what I really want to know is, can we find another bear? What is this? This is a bearish wedge. What kind of candles was this? Right. Could we find another on here? I'm curious if there are patterns, because the reality of these candles is they form after the fact, right? So I'm curious if there's been this pattern forming priorly.
Word.
to kind of give us
It may not
a
be
bit of a trend.
here. Trying to find one. These actually, some of these patterns was hard to find to begin with.
Yeah.
But I'm looking for the ones that's clear. This could be one, because it started up here, came down. Actually, no, you wanted which one again?
Where were we? What was that thing? It was called the bearish, right? It was a bearish flag.
Yeah.
The
Mhm.
bearish
I was curious if there was a prior bearish flag on that particular ticker you was on.
Oh, on the same one. I got you. So what was this? Wednesday. What was the date on here? 9/11/24. 9/11. Go back on here. Oops. Go back. 9/11.
And the only reason I bring that up is because some you know, tickers or candles, they go back to, you know, like Nvidia is gonna go back to 117. Okay. No, it is. I mean, I don't even have to look at it.
We
There's just
gotta
some of
get that
that.
in there.
That's really what this is about.
No, no, it had nothing to do with Nvidia. It had nothing to do with
Let's
Nvidia.
keep it a buck. That's what we talking about. What all conversations
Actually,
lead back to
I could
NVIDIA.
only reason I could feel comfortable about Nvidia is because look, if there's gonna be a ticket that's gonna move the market, wouldn't you want to know who is gonna do it? So if we
That's
know
true.
it's
That's
Nvidia,
true.
and if Nvidia is gonna go back down, then you got a little bit of grace. So,
Funny.
am I saying something wrong?
You
But
person.
if it goes back to 117, and this is any stock, just like how the reason I took the trade I did today was psychological and 56. It was trepidation of going back to 56. How we've been at 56 a couple times and it can't kind of break through, and it's kind of funny. And those are the things now that you see a pattern, then I'm sure that's all I'm trying to. Sorry, that's all. I'm just trying to get back to the pattern because we're the day of it. We're so in the day of it, as opposed to just like how we know at noontime is a pause. You know what I'm saying? But if we put a little bit more intellect in there, I'm like, oh, okay.
Yeah,
It,
you gotta pull back on the time. It's basically we sometimes
yeah.
get caught up in the day, the price action of the
Mhm.
day, that we don't look at the overall, the
Thank you.
days
That's
and the
what I'm
weeks
trying to
and the
say.
months.
Exactly.
Yeah.
Yes, the bigger picture of it, because we know that stocks. I mean, the candle's gonna go back and forth to whatever. That I mean, that's how Mancini got his different zones because he done looked at it 50 million times. He's like, okay, that's all.
I'm assuming that you can't, you have, and I've heard on one of your videos, ma'am, you're gonna have to know one stock to be able to catch these flags, unless you just fall right into it. If you know that stock and you've been studying it, you'll see the flags. I think, to me, you see it more evidently because you see the price action and you know what to look for.
Right. That could be one thing. The other thing is, instead of looking for all the patterns, you look for one or two of the patterns. Like even when I
Mm,
do the strat, one of the things they teach you is to decide that I'm going to trade two reversals. I'm going to trade 1-3 reversals. Basically, to pick a couple of things that you're going to look for all the time and just trade those things. So you
okay.
can be looking for certain patterns. Again, not trying to look for all of them, but look for certain patterns in whatever stock. You say, okay, I'm gonna look at whatever stock this is, but I'm gonna look at I'm gonna look for the head and shoulders no matter what stock it is.
Yeah. And that's it right there.
Mm-hmm. So you can pull up anything. If you said, I'm only looking for head and shoulders, then that's what you'll see. Or I'm only looking for consolidation, because when you look at the ones that is coming in the wedges, what that really is it's consolidation that's coming together. And at any point or at some point, consolidation is going to break out.
Yeah. Yeah. 100%.
And even though that's head and shoulders, also though, whenever I go into any chart, first of all, thank y'all for your input. Whenever I go into any chart, the first thing I always look for is where's the run? Where's the pole? This pole was heading down. And when I saw on this one, I would have considered this the neckline. So for me, this probably would have been a bullish, the bullish flag. No, I'm sorry. Which one is that? Bottom, one of the bottoms. Double bottom, one here, because I always look for, so on any chart I go into, if I'm looking for candle patterns, I always look for the run. This would be the run.
Okay.
Right, I start with the run. Okay, now once I figure out the run, do I see any type of pattern? Right, sometimes you will, sometimes you won't, but I definitely start with looking for the pole. This is the pole right here. This is a serious one up.
Mm-hmm.
Oddly enough,
Okay.
NVIDIA is the one that I saw that had the craziest run-ups, and was like, oh, I mean, it had plenty of flag. It was like last year is when I noticed it the most with NVIDIA. But here's another run right here. Right, this got to about halfway, then went to the upside. Here's another run right here coming down. So these have all been bearish. Here's a bullish one right here. So I always look for that, and this could be considered a head and shoulders, I would imagine too.
Mm-hmm.
So I always look for the runs. I usually look for the runs. And usually that's, I would say 9 times out of 10, that's what kind of helped me start seeing things a little bit clearer. Is just look for the runs. I know. Yes, I will explain that in a second. See, this is another one. This is a good one because it was a push down, right? Triple bottom, push up. Look at this push up for this run. It's a clear flag close right there. So I'll just be watching this to see what's going to happen and when it's going to break. So that's another example. So when something retests.
Wait.
It looks like
I'm
it's
sorry, go
already
back.
broken.
Right. That's exactly what I was gonna think. If that's the pole, Jamie, and we see the angle coming down, yet you got that green that popped out above that last green one.
You
Would
talking
you
about this?
say no?
Right
Okay,
here.
that's the end of the pole right there. Then you
Okay.
go to the right and you go down at an angle. So we're thinking that angle is going to the right. Now that mark that you have your hand on, would you say, okay, that's showing us it's gonna go back up?
Oh
So that
yeah.
resistant line of 700, or are you thinking, hey, I would wait for the next one to come out?
I'll be looking at that for a couple of reasons, actually.
Okay.
So if we were doing it this way, and I'm just trying to connect two of these, and this is my flagpole
Yeah.
going this way, I would consider this to be that the buyers are mostly holding serve. It didn't break down more than halfway past here. There's no reason why I wouldn't look at that as breaking up. But also, again, and I just said this a couple minutes ago, my entry signal for my trading plan is based on I got it from Thinkorswim, and it's in this case it will be this closed above the high of this is the low day. This is the lowest day in this group, or the
Yes.
most recent. This is the lowest day. This came all the way down to 660.80. When this candle closed, it closed above the high of this low day. And that's a signal that this may be going up. So I would be consider this a potential breakout because of that.
Got it.
Because it closed above the high of this low day.
That was today's candle, wasn't it?
Yes.
Yep.
All right.
Yep.
So tomorrow.
But we on the 5-year chart. Is that the daily chart?
This is a daily chart.
Oh, okay. Yeah. Wow.
Daily chart. So that's yeah, I would definitely be looking at it for that. And also because these buyers keep pushing this up, down, this is a strong. So yeah, in this case, that could be considered a break. When we talk about retest, we're just saying that price came back. Like when this went up, let's say if we're using this 673 blue line, I'm gonna lighten this line up so it can be clearer to answer the question. If we're using this line as an example, when price came up, it went through this line, it hit this line again, that's a retest. Came back to see what is it gonna do. It bounced, retest again, bounced, retest again, and this time it went through it.
Mm-hmm.
Right? This would be considered 1,
The head and
2,
shoulders.
3.
Yeah, it
I
sure
would
is.
say it's a triple top, probably. I'll be looking at that as a triple top because it came up. Actually, wait. Let's see. Yeah, triple top.
Yeah, triple top.
Boom, 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 and then it came back down. That's where I'll be looking at.
So
But
the difference between the head and shoulder and the triple top, the head is always larger in the
yes,
middle.
yep.
Okay.
You'll see it be something like this. This is not a this I guess this could be an example, but it's not one that I would pick as an example, but it will have this type of it's this much distance or exaggerated distance between the head and the shoulders. Enough where you can tell that it's, this would be, I guess, technically a reverse head and shoulders if we're using it from that angle.
It's definitely a higher high in the middle.
For sure.
Mm-hmm.
That's what distinguishes it.
The head and shoulders,
The
yeah.
higher high. Yep. So it breaks out and then it comes back to retest it. Breaks out like this here, came back to retest it, came back to retest it again. And then further down the line, that's what makes these retests important, because further down the line, when we see, other candles, then, we might see other candles that are retesting it, and then that lets us know, okay, this is a strong, that's that parity line we were talking about, where this support now might become resistance later.
So would you trade the break or trade the retest?
And well, it depends on what
It
you're
depends
doing
on
for
what
your
you're
trade
doing.
plan, really.
Sorry, I didn't mean to
Yeah,
jump in
what you're
on
trading.
you. TJ says you scalp the break and you swing the retest. So
That
basically,
makes sense.
scalp the break, basically plan for a pop, but it's gonna come back, and then once it comes back and retest and reject, then you've got a longer
Right.
ride. Basically, you
Yeah.
got a chance for a longer ride.
All right. Well, I don't do scalping, so my non-scalping answer is in this particular.
Well, I mean, and when I say scalp, because a scalp isn't necessarily something that's going to happen for a few minutes. A scalp could be the day, and the swing could be 2 weeks. You could maybe day trade the breakout and then swing trade, which could be, a couple weeks or whatever, the retest of the break.
I'm just saying I don't even scalp, but from a non-scalper's perspective, on this particular question that was being asked, what I would be looking at is the fact that it did close above the high of the low day, but my concern would be the amount of sellers that are up here, because this is a reaction from sellers.
Right.
So in
Even
this,
on that breakout, there's a reaction from the sellers as well.
so in this particular, I can't speak for the general stuff, but in this particular situation, I will be paying attention to that just because I'm seeing some strong activity up here. But
since that activity, that line has been tested so many times, would that resistance be considered weak? Because of how many touches it's had?
I personally think so. But the only reason I say that is because of because they're all so close together.
Yeah.
And I am going by IWT method and that kind of thing. So, but I recognize that this is a line that has been, touched before, gone through before. So it could be considered we know sellers are sitting there. And depending on what the news is, that being said, depending on what the news is, this might be one of those situations where it gaps up.
That's what I was gonna ask,
Depending on
because
what's
that
happening.
looks like it could, similar to like how you had that in that, if you stretch it out, it was another double bottom within that. Because you have those two touches down at the bottom with those, yeah. So it came down, touched it twice, and then went back up.
Yeah. So it could very well, and it's Netflix. It's always, Netflix don't have as much quote unquote volatility as let's say a Tesla. But the thing about Netflix is, at first when Netflix was getting started, nobody thought they would be able to last because they was spending so much money on creating content. So they didn't see the business model being what it became. And so now when Netflix is releasing something, there's millions of people watching it. So that could be good news for Netflix. Some call Squid Games and, all these other things start coming out. And that could be a good, that could be a boon for them. Outside of earnings.
Has it been up this high before? 7-Eleven 33? Has it been up that high?
Netflix?
Yes.
I
If you
don't
just
know.
go back to the left, just a little bit.
I don't know if
that marks the highest high. So you
Yeah.
wouldn't even need to go back to the left.
Yeah, it marks the highest high in the last 52 weeks, which is 7-Eleven.
Yeah, it's right there.
I thought it marked all-time highs, but okay. That's good. It's good to know.
You thought what marked it?
I thought this one marked all-time highs, but I'm glad to
know.
But yeah, so it is up this way. 21 around what, COVID time? Somewhere in there. And that's when it fell off, but it has I mean, don't be surprised if they start talking about a split at some point. Because they have
Right.
been
And
definitely been on the
anytime
run.
there's news about the media, which, the Paramounts and, the football and all of those things, Netflix gets a little funny sometimes.
Yeah, because remember, the streaming services are starting to get over, and with the sports packages. Amazon Prime now carries football. Some of the other ones are, YouTube carries sports. So, Netflix, man, it's only a matter of time. But notice here's the flagpole. So, and this is the monthly. So something is bound to happen. This is what I meant earlier when I was saying if you switch the time frames, it won't look exactly the same. This run-up is not the same as the one on the monthly. So that's what I was referring to. This looks like a legit, flagpole, whereas this one, I wouldn't see this one as like a regular flagpole because it's not because it's kind of based. It came down and went up. So that's why I was saying it depends on the time frame you're looking at. This is a good example of that. As soon as we change those time frames, the poles might start changing. This one works on the daily, but on the weekly it did not. 4 hour.
Can we see the weekly?
And it will have a pole here.
That's the pole. Okay.
So the polls, people work the polls daily, not weekly.
All right. No, don't do that. Don't do that. That's
You
just
got polls,
wrong.
different area codes, is what you're saying? I got you.
And then are we talking about weekly WEEK or WEAK? Which weekly are they working at?
Both.
Look, you're gonna need some strength to get up on them polls, okay?
Okay,
So
let's just stop.
hopefully it ain't the weekly.
Listen, inflation is hitting everybody. We all gonna be up on some poll somewhere.
Okay, seriously. I'm not hating. I'm not hating.
All right, so that's all I got. If y'all don't have any questions, that's all I got for chart patterns. Again, pros and cons. I like it. It helps anticipate price direction. It can appear on multiple time frames. It can be used in conjunction with other technical tools. And I love that it adds another tool to the technical analysis toolbox. The cons for me is not seeing all the time frames and price unpredictability. So don't forget the pole, the trend, and the breakout. Those are the three parts. I'll be more than happy to drop these pictures in the group if y'all want them. This graphic as well, so that y'all can use them as a reference if you're so interested. All right. Anything else, Alyssa?
I think one of the things that we came through in the conversation, in the discussion, was that as we're talking about candlestick patterns, or we're talking about the strat things, or you're talking about broadening formations, a lot of these things are like interchangeable. It's really just picking which thing do you want, because as we saw the wedges coming, that's the same thing as consolidation or one candles that you could see on the strat method. I think it's really basically I think it's wonderful that we're able to look at more tools to the tool bag that Jamie said. But you do want to pick some strategy that you can use that is shown on multiple time frames, or that is fractal, as they say. The word is fractal. And I do, not that I want to push the strat, but I'm just saying, I do know that the strat is something that goes on every time frame. No matter when you are trading it, you can see the ones, the twos, and the threes, and the patterns are there. Same thing with this. Now, Jamie was saying that you can't necessarily see the patterns on other time frames. They just, of course, they're going to be there. They're just nowhere near as pronounced. So it's going to be much harder to find them on smaller time frames if you see them on the larger time frames. That's why you'll see people sometimes do, people will have more than one, like that people will have multiple charts or multiple time frames up on a chart at the same time, right? So that way, while you're looking at a smaller time frame, you're also able to see the things that are happening on larger time frames at the same time. So I'm just gonna real quick show you this. So basically, you're depending on what you're looking at, you can. I guess I'll find my thing here in a minute.
Right. You got the weekly, daily, 15.
Yeah.
Yeah.
That way you're seeing everything all at one time. So that way, if you're trading, just a particular something, you can see all of it at once. Now, this is required that you kind of be focusing on 1 to 2 things or whatever, where maybe you're not focusing so much on multiple stocks, or you can, put multiple stocks in here. You don't have to link these together. Like mine are all linked together with the one, and the one. So when I change to another stock, all 4 of these charts will change. Right. But you don't have to do that. You can disconnect these right next to the ticker. You can disconnect them. And then that way, if I decide maybe I'll make this one red, but I decide, okay, I want to see SPY over here and I want to see coin over there. So you can connect them or disconnect them, really up to you. But many times you see people who have, like I said, the month, the week, the hour, the day, just so you can see. While you're watching a shorter time frame, potentially for your entries and your exits, you're also looking, you were talking about, Janae, about pulling out to the bigger time frames. You're also looking at the larger time frames at the same time to see, or to make sure that you got the levels you need from higher time frames, or there are patterns popping up in other time frames, that kind of thing, right? Yep, this was my Coinbase. I think Mr. Mack charted coin for his homework too.
Can we look at that one that he had? Yes, Netflix. Yeah.
Yep, this is Netflix. Let me change this one back to where it matches. This is the month is down here at the bottom, in the bottom right. The week is up here at the top. The day is up here. I think this is day, week, yep. And then the 1 hour is down here.
He had asked about the rut trade that I did. I forgot to.
Yeah, okay, we'll swing back around to Mr. Mack. Did you have a question on Netflix?
No, I was looking for that flag that we was just looking at. in the training.
So if you see, I mean, one of the things she had talked about was you're going up here. This is on the daily chart. You got your flag up, and then we pull it back down to the little downwards trend, and then it went back up. It broke out above that and went on.
Hmm.
Okay.
Yeah, it looks more bullish on each of these. It looks more
Which is
bullish.
why you pull out for the time frame to see what is the overall trend, even though in the midst of it looking bullish here on the monthly chart and on the weekly chart, you can tell on the daily chart that it's basically pulling back a lot. It goes up and then pulls back and goes up and pulls back. So that's why when you're also determining what are you trading Netflix for 2 weeks? Are you trading Netflix for 2 months? Are you trading Netflix for the day? Or are you swinging it for a couple of days? Like when we do our credit spreads, we're doing credit spreads from week to week. So though we're looking at the overall trend from the month and the week, we're thinking, okay, what's it going to do this week?
Okay.
Right. So you got to have in mind before you get ready to place your trade is what, as ADEX calls it, what time frame participant are you trying to be? Are you trying to participate as a daily person? Are you trying to participate as a weekly trader or participate as a monthly? Are you trying to participate for an hour? Like and because those things are going to make a difference into what your trade is going to be.
Okay.
Yep. Jamie, you can have the comeback so you can go and show your rut trade.
Sorry about that. Can y'all see my my screen?
We can.
The rut screen?
Yep.
Okay. So this was the day in particular. I got into this trade. Was dropping. Where was I when I got into this trade? Because I remember when I saw this. Actually, give me 1 second. I can give you more specific numbers. Give me 1 second. A second. I believe it was this. It must have been this day. What? Well, basically, my PC froze, and when I got back to the PC, it had breached my strike. Now, it so happens that I had a 1 DTE, so it was supposed to be expiring today anyway. So let me see. Today, 7 days. And let's see, maybe 1050. Yeah, I must have got in this candle, I think. Somewhere in here. And momentum was heading down pretty strong. And so my PC froze. Some probably somewhere about right in here, maybe. And yeah, because my I had 21 15 2120. So I was in here. So when I got into the trade, I was using this candle to say the time frame that I was getting in. When I got into the trade, I was up here because I did a CCS because this was running down. So I did the call credit spread. This is about I'm looking at it, it looks like it was 1045. So I usually don't start messing around with getting in until about 1030. So I was up here. Everything was going well, boss.
You only had one side. Is that the issue?
No, the issue is I was up here. The trade was fine when it was coming down here. Then the trade was fine when it got to about right here. But because my PC was frozen, I wasn't able to maneuver, and I didn't know that it was breached until it got all the way here to my 2115. Because I had put in the other side for it to lock the PDT hack, it just didn't go down far enough. But I would have just closed at a loss if my PC would have been, if I would have, it would have been refreshed. And I have mine set up to, for the fastest, whatever the setting is to make sure it runs fast. But what ended up happening, the only reason why this ended up being quote unquote an expensive lesson, not just because the money lost, but it actually was a good thing because it turns out there may be something wrong with my router. And so the issue may be my router, and I might have to get an updated router. Because another program was having trouble connecting as well, I found out. So, yeah, so I'll just look at that loss as, diagnostics fee. How about that?
You know what?
Okay.
It's crazy how the lessons come, right? Because I could have sworn 2 weeks ago we was talking about learning another platform in the event of something else, right? That's deep.
Yeah, but in this case, it
I
wasn't.
was just wondering,
It was all frozen.
even your phone,
Your
you
mobile, okay.
didn't. Yeah.
Yeah, my mobile, I trade on my internet. So yeah, the issue is the router.
Wow.
Yeah, everything is connected to the internet for me. So
the internet, so your phone was frozen. That did definitely let you know it was not just the computer.
exactly. That's why I said it's the router.
I'll take the blessing in disguise because a couple months ago we couldn't someone was MIA
I
and
know,
they were
right?
perfectly fine.
Here we
And
go.
was it not this internet thing?
Yeah, now they weren't perfectly fine. They
No,
just
the whole
were
power
not.
was off at that point. That was
Oh, okay. Power, internet. I mean, well, if you don't have power, you don't have internet. So I get it.
But that was a
But
situation. That was a higher magnitude.
They needed us. They needed us. Even though they act like they don't be needing people, they needed us.
Pam down.
Listen,
I understand the reverse psychology.
I
Jamie,
told that story.
she's just saying she needs you more. I get it because she
No. I told that story in Impact. I didn't tell your name or anything. I just said I had a friend that I had gone missing. I was looking and couldn't find him, so I sent the police. One dude in the call, might even TJ was like, "Don't send the police to my house, please, Auntie. Don't send the police." I was like, "No, we needed to send the police in this case." He's like, "No, please don't send." He said, "Don't send the police to my house." He said, "Come looking for me yourself. Please don't send the police."
But you know what? Actually, though, I'm gonna take it to the far extreme. But that's right, though, because when I think of Sonia Massey, we wish that the police didn't come to our house. That's deep.
Yeah.
But
Yeah,
Jamie,
true.
fix that because we don't need two of that happening in a row. And right
Don't
before
make us
cash
come look
flow.
for you, because we will. Don't make us come looking for you, because
Right before cash flow weekend, because that's how we knew something was up. It's like,
right.
Dude,
he's missing cash flow. Oh.
Right. He can't be missing cash flow. Something has got to be wrong.
He must be sick and afflicted.
Jamie, let me ask you a question.
Yes, sir.
Looking back at your chart, I see where you entered at. Your thought, I'm just trying to understand your thought process. You thought it was going to rally back above where you entered at. Was that correct?
No. When I got into this, it was a call credit spread and price was down here. I thought it was going to stay below it. I was in the call spread for 21.15, 21.20.
I got you.
So I thought it was going to stay below this.
All right. Okay.
Yep. So when I got in, it was pushing down. Yep.
Where would you had gotten out? Let's say everything worked great. Where would you had said, okay, I got to cut it now because it's not reversing. If you was able to be online,
I would have gotten out at 30% of I think it was I believe I got was it so I would have got out at when I would have put my limit price at 3.60, and it would have took me out of the trade.
Okay,
So wherever 3.660 was on in here,
sure.
that's when it would have took me out of the trade.
Okay, all right. And you set that automatically. That's just one of your habits you do when you put on this trade.
Is to do what?
Is to set your stop loss limits.
You know what? So I haven't been, because one of the problems with the indexes, RUT and SPX, is they'll bounce around and go past your strike and then take off, and your trade will be fine.
Mm-hmm.
So I've been trying to figure out like what's the best way to do it. 30% seems to be okay, like okay. But I have to be concerned about day trades, because obviously, if it triggers that stop, then that's a day trade, because I got in and out of that.
Okay.
Got in and out. So what I've been mostly doing is just working on watching it and making sure I know how much I got in at. And then what I'm doing now is just locking it in, as opposed to closing it, locking in the loss at like 3.60 or what have you,
Okay.
Using the PDT hack.
using the PDT hack to do it. Instead of closing the trade, just use the PDT hack to do it. So when I go on the other side, sometimes you'll do it like, at price, just accept the price that it's offering. But just to get out the trade and then free up my collateral. for it to-
Jamie, show him in the option chain when you're saying that, because people who don't know the PDT hack wouldn't understand what you're saying when you lock it in on the other side and put in a 3.6.
And I'm
Okay,
assuming that's one of the training that's available to us now. Because I remember someone saying about the PDT hack.
That's why I asked the
Yes,
question,
there's one in
Jamie.
but the PDT hack goes along with day trading, SPX or XSP. Definitely
Okay.
use it on or RUTs, use it on a cash settled equity. But it's basically when you're doing zero DTE credit spreads. You use it along with the credit spreads for zero DTE.
Okay.
But yeah, if you want to see what that is, you can definitely do a search in the group or let us know, and we can find that training and bring it back to the bottom, and you can look at it. You're gonna need the prerequisite basically to understand what's happening is
Yes,
to
ma'am.
understand the credit spreads. But yeah, you could definitely look at it.
So we'll use this as an example. If this is we'll do 82% out the money, 2105, and I'm doing this as a quick credit spread because I'm seeing that it looks like price is moving up. So I'll be down here under current price. So that's why I have that. So let's say I get in, of course it's not going to accept but just so you can see there's a buy and a sell order there.
Mm-hmm.
So then what I'll be doing is, since I got on that side, I need to come over here and I'm going to put in the opposite trade, opposite side. So same strikes, where I bought on this side, I'm going to sell on this side, right? On 2105, 2110, where I sold on the PCS, I'm going to buy on the CCS. I'm sorry, on the yes, on the CCS.
Mm-hmm.
And then in here is where I will put what my profit target would be. So let's say we'll just put a number in, say 40. So let's say 480. Right. So then it should look like this once both sides are filled. It'll say position, POS for position, but on the same strike, it should be a sell and a buy. on that
Mhm.
one and sell and a buy on that one. They should be opposite
Mhm.
on both sides. Now, if you want to be technical about it, what's really happening is these are basically just two straddles. Because on a don't you is it a straddle where you buy and sell? What is it called, Arlissa? Which strategy is it when you buy and sell on the same strike? Is it
That's like a iron butterfly, something like that.
okay? Because I know that there's a strategy where
Buy
you
and sell on the same strike. Okay, I thought you, no. Is it strangle, straddle? One of those words.
it's one of those where you buy and you sell on the same strike.
Yeah.
And so whatever the name of that strategy is, technically that's what we're doing.
Okay.
We're just doing it as a credit spread. But this is what it would look like when the positions are in, except it'll just say accepted and it'll say position.
And if it goes against you,
Once both sides are filled, it, as far as I'm concerned, it can't go against me. Once both sides are filled and I put my profit target in there, I just gotta wait to get exercised and assigned. And that's what I was gonna say earlier, by the way, with Thinkorswim. To do a PDT hack is about $17 in fees.
oh,
Yep. Because the two legs that expire in the money get excised and assigned, and that's $5 per leg. And the money is $5 per leg. Now, I ain't complaining because TradeStation was charging me $75
Right.
Wow.
per PDT hack. So, hey, I'm just reporting the news here. But so I was trying to figure out what was going on because I was being profitable with my PDT hacks, but my money wasn't growing.
mm,
So I'm like, what? So I had to go investigate, and turns out I was thinking it was one amount, and it ended up being
That's good information, especially for the people who are doing XSP, because with SPX, you're pulling in enough money to make it work for you. But if you're on SPX and you may say locking in $25, but you're paying 17 of them, that's
yeah,
it's
yeah.
not going, your money's not going to grow very well either.
yeah. So I figured,
Mhm.
now I just build, I got to build in that $17 as part of my
So the exercise and assign, what do you mean? I mean, only one side is getting, I guess, exercise and assign those two legs, huh?
in the money. The ones that
Yeah.
send money, those are the ones that'll get
$5 each, you said?
$5 per leg. Yep. So keep in mind, once you start scaling and go up more contracts,
That, well, you gotta figure that in.
yep.
Mhm. Yep.
So, Jamie, how much do they charge on Tasty?
That's what I'm talking about. Did I say Thinkorswim?
Oh, you
No,
said
you said
Thinkorswim.
Oh, I thought I said Tasty Trade.
No, you said Thinkorswim.
I'm sorry. My apologies. I was talking about Tasty Trade. $17 for Tasty Trade. Trade
Okay.
Station $75. I haven't done these trades on Thinkorswim
I
Live.
really didn't think Thinkorswim charged you for that, but that's
They
definitely because
do.
they
I
do. Do they charge you $5 a leg?
I would check. I just know Tasty.
You said, I would check.
I can just tell you what Tasty Trade is doing.
Well, two quick questions, because I thought the $10 would help, right? Is that Tasty Trade?
What do you mean?
Arlissa, what did you say earlier about Tasty Trade being $10?
It's capped.
I mean, yeah, if it's capped at $10 for all your contracts?
It's capped for that's for the number of contracts. So if they charge, like, let's say they charge 50 cents a piece, if you put on enough contracts and you pass $10, then they don't keep charging you per contract. But I don't think that pertains to what Jamie's talking about.
Yeah, and you also got to read the fine print on that because that's when they start getting into, as long as it's not an index and as long as it's a this and it's a that, you got to make sure you know what all they talking about when they let's just say I've been spending a lot of time reading fine print. Let me just say it that way.
Okay, well, that's good to know because that's what I need to look at or look through because that's really the thing. And then real quick for the PDT, it was what 2105, 2110 on the put side. But then on the call side, is it 2110, 2105?
It's the same strikes on both sides. I
Mhm.
put in this one over here. I was buying 2105 first, selling 2110 on the put credit spread side. So I put that credit spread in 2105, 2110, buying 2105, selling 2110. Then on the other side, I was selling 2105 and buying 2110.
And your day goal is that the price remains below.
That's the goal.
Okay.
Now,
So
No, no,
because
no.
it was below, is that how you got breached? Because I didn't think you could. I didn't think you could
no,
lose with a PDT hat.
but the thing is, my second side hadn't filled yet.
That's what I said to.
Oh.
Okay, that okay. All right, I misunderstood. I thought that was the reason why you got breached because I was like, if you had two legs or if you locked in the other leg, it wouldn't be a breach. Okay.
Yeah, I got
I mean,
breached.
it wouldn't be a loss.
Yeah, it didn't. It did. The second side did not. Hadn't picked up yet.
Got it. Okay. Because if you filled both, if you filled if you fill both sides, then it's a guarantee, right?
Yep.
Okay.
Yep. Once both sides are filled, you can walk away and let it expire.
Okay. That's what I thought. All right. That's where I missed. Okay.
So,
I didn't.
so Jamie, when you go into these, do you go in with a specific profit target and then you put in your other leg, or you wait and look to watch the chart to put in to lock in your price? Because you're saying that it didn't pick up yet. And I'm wondering, and I mean, because I don't do RUT, I do SPX. When I have a certain profit target, and as soon as it reaches that profit target, I go in and I put in the other side, and it picks up immediately because I calculate what I have to put in for it to pick up immediately. Do you know what I mean?
I do. In this case, so I always go in. I already know that I'm pretty much now because of the $17. I gotta kind of rescript what I want to do in terms of what I'm going to be asking for
Right.
but originally I was just doing I think I was just doing $40.
Okay.
So
Now you're going for higher premiums. We was just talking about that with Alyssa going for higher
well
premiums.
well yeah, technically you're right, it's higher premiums, but really I'm trying to cover the fees.
Right. No, I get it. Right. Yeah.
Yeah.
It don't make sense to get $10 and then you can't
Yeah.
cover it. Right.
So for the longest, so basically every time I was doing my numbers, I was always just doing, $45, not knowing that it was basically coming out to $20 at the end of it, but it was always 40, 40, 45, but usually just 45 because my logic was I just want to, if I can quote unquote take home $40 per PDT hack, that's easy enough for me to scale.
Mm.
Right? $40. All I got to do, I mean, if I do 2 contracts, I know that's 80. So instead of me fiddling around with a bunch of numbers, just always be $40, and I'm not asking price to travel that far to get me from point A to point B. $40 is not, it's not that hard for RUT to, especially if it doesn't fill that day. It usually fills in the morning at open.
Gotcha.
So, but my number was 40, 45, something like usually 45, I would say.
So then with that being said, if you're doing it at 1 DTE, why don't you just put in a certain percentage profit and not use PDT? Do you see what I mean?
I'll be using the day trade.
Not if it's going 1 DT and it closes the next day.
Well, this particular trade was 1 DTE, but the second side didn't fill.
Right.
This one was a 1 DTE. Matter of fact, it was expired. This happened yesterday. It expired. It was expiring today.
Mm-hmm.
So this was a 1 DTE. It just didn't fill, and I didn't know that it was getting breached until it was being breached. But the reason why I use the PDT hack is that so I can put in multiple PDT hacks. So I'll put in a 1 DTE, and once that's in, then I'll go to the next day. So let's say
Oh.
if this would have went fine, then today I would have been putting in one for tomorrow, for example. So I always try to make sure each day I got something expiring. So
Got
I'm
it.
collecting some money pretty much every day.
Got it.
Okay.
But for my trading plan, if it doesn't, I don't put in the next PDT hack until that one, whatever one I'm on at the time, is finished.
So okay, I'm seeing what you're saying.
Yep. Because my end game is to be better at mastering reusing my collateral.
Could you then do, instead of the PDT hack, do once the day has closed out, go in and put in a closing order for a certain percent
Sure.
instead of the PDT hack? Or never mind.
Well,
I'm picking up what you're putting down.
see, the thing about the PDT hacks is that once both sides fill, I don't need to do anything with it.
Yeah.
So once I start changing stuff, now you're changing I will be changing the construction of the trade. And the whole point of the PDT hack is to let it expire. So I'm okay with letting it expire the next morning, because I'm planning on getting in another one anyway. Once my collateral is freed up. And I'm okay with not doing anything else to it anyway, because it's its own separate strategy. And I trade in Tasty Trade only with that strategy. I only do RUT in Tasty Trade now. So that strategy is always going to be expiring worthless. It's always going to be, it's always going to be going to expiration, PDT hack, RUT. So I can do what I got to do and be going and log out.
Do you buy as well, or are you just selling?
I mostly sell.
Okay.
I have a strategy that I'm working on for buying, that I have been testing in my sim, and it has been pretty consistent. So it'll be something I'm gonna test for the rest of the month. And I don't, even if I'm buying, I'm doing credit spreads. Debit spreads. Debit spreads. I'm fine with debit spreads. So I'm okay with not making as much money if my losses are capped. That's fine with me. So the strategies that I'm working on, it's like, hey, you ain't gonna make a ton, but you'll be able to be consistent with it.
Alyssa, you may need to express that in your next video, only because when I found out about PDT hack, I was lucky. I understood it like if a trade was going bad that day. But Jamie's using the PDT hack as his own different strategy. Like he's going in with it. I was always thinking PDT hack as like, oh my God, it's 3:00. I got in at 10. I'm like, oh shoot, I gotta cover myself. And it's a possibility to cover yourself without losing big time, and then without losing, like you said, the day trade. But Jamie got this whole strategy going in.
Well, Jamie's using it. He's not using it to save the day trade. He's more so using it to recover the collateral.
Yeah.
So he's putting the collateral back. So it's not really what he's doing isn't really called a PDT hack anymore. He's really more like covering the collateral. It's called something else, but he's using the same concept to do it.
No, X Options. I'm going by exactly what X Options is doing. That's who I got it from.
But she trades every day. She's trading it every day, right?
Yeah.
She trade. I know that she does, at least in her videos. all the videos that I've seen that were PDT hack were from Axe Options. I'm doing what she does.
I get you, but she does it each day. She's not doing it for tomorrow expiration. She's doing it for today expirations.
Right, but you were making it sound like it wasn't the PDT hack since it wasn't for the same day.
No, because it's not called a PDT hack anymore after that, because the whole purpose of it is to save the day trade, but you're not day trading because you're trading for the next day. Day trade means I'm trading these things today and I don't want to open and close it today. But since you're setting it for the next day expiration, it's not a it's not a pattern, it's not a day trade anymore. It's a 1 DTE.
Yeah, okay.
But I get it. It's all good. And you're
I
right,
do get what
because
you're
we
saying,
all have
and that's fine that you're
variations.
using it that way. It's just
Yeah, we
that's
all
not
have
what it is.
variations of how we do stuff.
Yeah,
So
that's fine.
yeah.
It's just not really that anymore, but it's fine that you're doing that.
The
That
only
makes sense.
time I do it the only time I do the day trade as the way you all are talking about it.
Jamie, you could call it your own thing now that you're doing it your own way. You can call it JE.
The JE hack.
The only time I do 0 DTE if I get a 1 day and a 2 day and they both filled, then I'll do a 0 DTE. Like how y'all talking about.
Okay.
So
All
I
of that.
still do it as a 0 DTE, but I guess the way y'all saying it.
Techie 2. What is it? What's
Take
one
it
of
to
the names?
trader.
I
Check
think
it
you
to
got. I
trader.
think you can coin that. I think you can coin the way you handle reset your own way and call it techie something. Okay.
Oh goodness.
Well,
Goodness,
let,
techie something.
let me just say, I'm so confused. I'm just gonna get that poll out. That's what I'm gonna start doing.
That's funny.
Yeah.
I'm so
Oh, my
confused. I'm going
goodness.
to the poll. That's
Oh my
hilarious.
goodness.
All right.
Just make sure it's either a covered or a naked call.
Yeah.
Mm,
This was very educational. Thank you, sir, for teaching us this.
Yes, thank
Okay.
you, Jamie.
Thank you. If y'all have any questions, y'all can inbox me.
Okay, sir.
Okay, so do we need to go back to our main screen? Jamie, did you have any homework you want anybody to do?
I guess we could all learn the JE way.
Homework. Wait a minute. I ain't a math professor.
I just asked, did you have anything you thought people should do to practice what you were talking about?
Listen, I would love for you all to at least, if nothing else, look at some charts and just see if you can at least identify the pole, like the run up, and it's usually going to be starting at a swing point and heading down, or a swing point and heading up. Stop it. Just stop it. So if you can at least say, hey, I think this might be one, the pennant or any one of those. I mean, if you think you can, because I'm telling you, when you go into any chart, that's the first thing that I'm noticing. And it's been way easier for me to identify some of those patterns just based on that. So I would say, go through and, post a couple but definitely look for the ones where it's like you see a consistent flow of candles in one direction. That's the main thing. They were saying that on the Schwab coaches were saying that you want to see where there's an obvious push and there's not a lot of, breaking up and trending sideways when it's on its way up. So if it's going to be some homework, I would say, see if you can start, identifying a couple of those, tag me in them. See what
I
you
have
work
a
out.
trivia question, Jamie, because now I'm curious about what the verbiage is per because I don't think I would have ever looked at TradeStation to find out if I did a PDT hack, if it was $75. I don't think that just comes up off on the screen. You know what I mean? They
It
just say
doesn't.
commission. I don't think that
When you
just
get
comes up.
exercised and assigned, they have an exercise or assignment.
Okay, that's the verbiage I need to look for. Okay.
It didn't show up under there. What actually happened was I was being profitable with the trades, but my cash part wasn't growing. And so one time I had like a trade that was like, I want to say the trade itself was like $75, $80. And I waited to see, like, wait a minute, there's no change in my cash. Like my buying power didn't even increase. So when I went to investigate, that's when I found out it didn't show up in any of their lists as a 75. I had to call to find out.
Oh, so it's not, it's not even in the verbiage.
It didn't show up, and it didn't show up under its fees and stuff.
But once you ask them about it, they're like, oh yeah, this is what we're charging you for.
This is what we charging.
Yeah.
Yep. He was like, oh, yeah, this is $75 for excising this. I said, 70. I said, dude, y'all made the trade unprofitable with the fee. Now it was,
Listen, do you have Robinhood?
I do, but you can't do SPX and XSP. You can't do those on Robinhood.
Oh, Robinhood doesn't have the index?
No, it doesn't have those cash settled indices.
Okay.
now listen, my question for you is, when you called, I forgot who you called and said that you negotiated fees with. Do you remember which fees you were able to negotiate?
The fees, the cost per option, when they, when you paid 65 cents per option, I asked them to reduce mine, and they reduced it to 50 cents.
All right, because I'm gonna be calling Tasty Trade like, it's $5.
Yeah, it don't hurt to ask.
Since it's the only thing I'm trading, let's have a conversation.
It don't hurt to ask. It definitely don't hurt to ask.
All right.
Not at all. All they can say is, no, we don't do that.
Yeah, true.
That's all they can say.
Jamie, I always go for 60% in my trades.
Oh, yeah?
And I tend to get it. I think I was talking to you about it that one day. Look back in
I hear that. I intend to get it.
Okay.
Listen.
And I intend to get it.
Had all kind of determination. You would have had everybody in church shouting off for that.
Say again?
I intend to get it.
Yes.
Okay.
I'm adding that to the post-it. I'm adding that to the post-it on my wall. I intend to get it.
I intend to get it.
Alyssa, you may have to put that in the declaration.
Listen,
Right.
I am trading strategically, and I intend to get it.
I intend to get it.
Yeah, well, I'm gonna stay green. I'm gonna get this money, and I intend to get it.
Please, tomorrow, just please.
You know it's coming up.
Jamie, look back in our first conversation about using the PDT hack when I posted the video with the calculator, when I was asking you about the calculator.
Okay.
Go in there, because I look, when I get to 60%, that's when I lock it in. And as soon as it's there, like that calculator will say, what's the price? And then it'll tell you how to lock in that particular amount.
Okay. I with my other vertical, like with the vertical credit spreads, is usually my profit is 60% for those. But since I'm just going for a particular dollar amount to take home, which is basically $40, I usually pretty much know what I want to quote unquote take home. So I work that from that angle.
Okay.
But yeah, I would check out the calendar and not calculator, and yeah, see, shoot, if doing 60% is gonna give me more money, let's do it.
And depending on look at what you're taking in as a premium. So like if I took in less than $1, then I'll go for 40%. If I take in more than $1, I always go for at least 50 to 60%. But particularly 60.
Okay. All right.
I think the key there too is gonna definitely be making sure that you are in the middle of a good push. And your strike selection, it has to keep going, because remember, in order to get that second side, it's got to breach, right? In order to get 60% off that side.
Yeah, I rewatched Max Options a couple more times. about a week and some change ago, and one of the things she had already said when she gets in, she wants the bid ask to be less than $1. But then she had made this comment about what she was taking in, and it was like well over like $1, like well over 1.20 or something like that. So I said I gotta lock into that because I was doing about $1, which is fine. I always go for that amount, but
I think she goes closer to the
I was gonna say, you gotta go closer to the money. That means you gotta
Yeah.
get a little closer to the fire, and you need it to bounce off the support or the resistance, and then you get in soon after that.
Yeah.
So if you're, I won't say scared, because I don't want it to sound wrong, but if you gotta be a little closer to the fire so you can pull in the first amount of money, has to be a good amount, so that way when it goes the other way, it's gonna breach quicker. You know what I mean? So you needed to go a little. And that's the scariest piece, though, is when you're putting on that first side. If you're scared to get too close, because if it turns back on you, you're basically left there. But the only way you're gonna take in the right money the first time is you got to get a little closer.
Yeah, I'm usually good on that entry, so that part I feel comfortable with. But I figure, if she picking up a couple more coins on that intro, might want to see what she doing.
So wait, real quick.
Go ahead, Janae.
So you can't be breached before it comes back to the second side. Is that correct?
Correct.
Okay, then. Got it. Because then I was
If
like,
you're
yeah, it
taking a
helps.
profit, if you're taking a profit, Janae, if you're taking the loss, then it can be breached. It depends on if you're locking out
yeah.
the profit or the loss.
Yeah. Yeah. Well, if it breaches and I lock in the loss, then that's a totally different situation.
And I don't know where you may have it in the group, but before I joined the group, I bought Miss Harlissa's SPX playbook thing, her entire SPX thing. And that's how I really, I focused on that only before I did any other spread. So I watched her thing like 2 or 3 times, Miss Harlissa's thing, and then I also watched the Axe Options girl.
Mm-hmm.
So go back to what Miss Harlissa taught as well, because you actually taught it, Jamie.
Did I?
Yes, sir.
Well. Good to know. I mean, I used to trade SPX, but I found it works better for me. But somebody else might like one of the other indexes using the exact same strategy,
Mm-hmm.
Who knows? XSP is cash settled, right?
Mm-hmm.
It probably don't have the same type of push though.
It does. It moves just as fast.
Oh yeah? Okay.
What's that one?
XSP.
Oh yeah, XSP moves just like SPX. Then that can be good and bad, but it moves the same.
So has anybody done the PDT hack on XSP?
I have not.
Lots of people have. I mean, there was when we had people over in the SPX playbook, they were doing it on XSP a lot. Nicole was doing it on XSP.
Oh, I didn't know that. Okay.
Yeah, that's where they were doing it.
Okay. All right. All right, everybody. Our Alyssa is doing her nails, so.
Like you can see. Give me a
Your nails.
Alyssa don't even do her own nails.
I know, right?
Yo, Alyssa comes fresh every week. Okay.
No, it's about 2 to 3 weeks.
Or what?
It's 2 to 3 weeks. I go.
No, Alyssa, it was yellow, then it was white and red. Nah, I said,
No, I do at least 2 weeks, maybe 3, because listen, going to the nail shop these days is like an investment.
Pretty much.
I couldn't tell. Maybe
crazy. No, I do. I'm gonna go tomorrow, but it's 3 weeks, and it's time. A few of them done lifted, but I'm saying I go about 3 weeks because it costs too much.
Advertised prices, y'all getting robbed.
You go there, you get a pedicure, a manicure, and any waxing done. It's you over $100. Period.
I was mad because they raised the cost of fades.
Fades. Yeah, haircuts are expensive now.
That's what I'm saying.
Yeah, my son talking about you pay $50, and if you want to jump the line, you pay an extra $50. Bro, I don't need to jump the line that bad. I was like, when he told